You know, for more than half a century, one name has been absolutely central to Indian agriculture: VST Tillers Tractors. So today we're doing a real deep dive, something for any investor who's interested in India's farm mechanization story. This is an analysis you are definitely going to want to stick around for.
All right, so here's how we're going to break it all down today. First, we'll look at VST's leadership and its incredibly solid financials. Then we'll get into their ambitious growth plans and future tech before we wrap it all up with a really practical checklist for you, the investor. Let's jump right in.
Okay, first things first. Let's really get a handle on just how big of a deal VST is in its main market. We're not talking about just another company here. This is a true pillar of Indian farming.
Just look at that number, 70%. That's VST's slice of the pie in India's power tiller market. I mean, let's be real, they don't just compete in this space, they pretty much are the space. A position that strong gives them a massive competitive advantage and a really powerful foundation to build on.
And believe me, it's not just about the tillers. VST has this incredible history stretching all the way back to 1967, and they were one of the first to bring four-wheel drive compact tractors to India. Just this past financial year, they sold over 36,000 tillers and almost 5,400 tractors, and they do this through a huge dealer network and by exporting to more than 40 countries. This company has seriously deep roots and a very, very wide reach.
So they dominate the market. But what does that mean for their financials, right? Because at the end of the day, market leadership is only great if it's built on a solid financial foundation. Well, for VST, the answer is a huge yes. Just take a look at these numbers from FY24. The return on equity and capital are super strong, which basically tells you the company is incredibly good at making profits from the money it has. But the number that just jumps off the page? That debt-to-equity ratio, 0. Yep, this company has absolutely no debt. And with a current ratio of almost 5, it has more than enough cash to handle all of its day-to-day needs.
You know, it's one thing to be profitable and debt-free. But VST is also sitting on a mountain of cash, almost 450 crores. A war chest like that gives you incredible freedom to invest in growth, pour money into R&D, and basically sail through any economic rough patches without even blinking.
So, with such a strong base, what's next? Well, this brings us to their growth strategy, and let me tell you, it is ambitious. The management here is not resting on its laurels. They have a really bold vision for where they want to go.
And here it is, the big number. The goal is to triple their revenue in about 6 years, from around 1,000 crores to 3,000 crores. That works out to a growth rate of about 20% every single year. So the billion-dollar question, or I guess the 3,000 crore question is, how in the world do they plan to do that?
Well, their plan is built on 3 really strong pillars. First, they're going to double down on what they do best, making it even easier for farmers to buy their products with better financing. Second, they're moving up, expanding into bigger, more powerful tractors with a really important joint venture. And third, they're going global in a big way, aiming to make North America a major market. It's a clear, smart strategy with multiple ways to win. But you know, growth isn't just about selling more of the same old stuff. VST gets that. They're also making some really significant bets on what farming will look like in the future, especially when it comes to technology and electrification. And they're putting their money where their mouth is. The company is investing 100 crores into a brand new global R&D hub. This isn't just some small project, it's a massive strategic investment that's designed to keep them on the cutting edge of farm tech for many, many years to come.
And a huge piece of that innovation puzzle is electric vehicles. VST has already shown off its FieldTrack EV, and they've teamed up with a US company called Solectrac to speed things up. And get this, they're not just building their own EV tractors. They're also supplying parts to other EV companies, which is a really smart way to build up their expertise in what's going to be a critical market.
Okay, so let's pull all this together. We've seen a dominant company with a perfect balance sheet and a super ambitious tech-focused plan for growth. So now, let's put it all into a final checklist for you, the investor, where we balance all the good stuff with the risks you really need to keep in mind.
Look, any investment case has 2 sides, right? On the one hand, the positives are huge. That unbelievable market share, a fortress balance sheet, and so many different ways they can grow. But on the flip side, you have to be aware of the risks. They depend heavily on a good monsoon and government policies, competition is fierce, and there's always a risk when you're trying to execute brand new projects.
So, what should you be tracking? Here's your checklist. Keep a really close eye on their monthly sales numbers. See if they can stick to their profit margin goals.
Watch how well they do in making financing easier for farmers. And finally, track their big projects, the new products, the export numbers, and the EV program. These are the things that will tell you if this amazing growth story is actually playing out.
Which leaves us with the big final question, doesn't it? VST Tillers Tractors has this incredible legacy of dominance and a really clear, really ambitious plan for what's next. The question for every investor is whether they can manage the risks that come with a farming business and actually execute on this plan to become a true global player in the future of farming. It's definitely going to be a fascinating journey to watch.